Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Apple report for Friday, November 10th, 2023. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. And before I click through all the charts, I just want to let you know that this week we also put out 2 stock picks, as usual every week, Nike and Starbucks. Starbucks went out on Thursday. Nike went out on Tuesday. Both have very relevant trade opportunities that you may check out and are welcome to. Just check out wickedstocks.com. We offer that 5-day free trial up front. On with the charts. Weekly bar charts. I'll start with the big picture, work our way into the day itself. I've been mentioning how holding above the 165 handle, 166 handle, mid 160s, long-term support because we settled above the structure back in May that set off a long-term show of strength that I am expecting to ultimately yield this 230.62 long-term rising channel top. Over the next year or sooner. Sooner would come if we could close today, that is the week itself, above 186.66, which doesn't look likely today, but maybe over the next week or two. This has been considered a 1 to 2 month target following the recent testing, yet again, of 165.40 to 166.82. You can see in the span of about 2 to 3 weeks, we've pushed into this area. This is a band of resistance that we've reached on the weekly chart. The daily chart, we also have reached 182.54, but I am hinging, if you will, on the top of the top channel. 185.68 is on the daily chart, 186.66 I showed you a moment ago on the weekly chart. This is the area, 185.68 to 186.66, that can be sold if you're anywhere from a 3 to 5 week swing trader to a 2 to 3 week swing trader, because the 3 to 5 week swing trader may have actually been buying the mid 160s as recommended back in late October, or you maybe bought on strength about a week and a half ago when we closed above the 173.10 descending 1/3 speed line that set up the 185.68 formation as a 2 to 3 week objective. And most recently, several days ago, having closed above the blue line, this channel structure at 180.29 today set up a 3 to 5 day buy signal to 185.68. So that is the big picture. 185.68 to 186.66 is able to contain buying not only for the week through next week, but also perhaps through the rest of the year. I've been mentioning how we could top out at this channel top and fall back into the mid 160s again within a month or two of testing this upper zone. So keep that in mind. We can grow overbought here in Apple, not only into next week, but perhaps through the rest of the year. 182.54, still a meaningful channel top. I know it's been pretty sloppy here, but still a day tradable level. If we happen to open above at 182.54, we just might today test 186.58 to 186.66, where once again we can top out through the rest of the year. Once again, if we close not only above 185.68, but also above 186.66, I think we've got a protracted rally that should play out through Q1, the next 3 to 5 months perhaps. By the end of Q1, we could reach that 230.62 long-term channel top. So if we did close above 186.66, no good reason to be short Apple on just about every time horizon. And in fact, you should position yourself, in my opinion, maybe reach for 240 out of the money calls that don't expire for at least a year I would say it would happen inside of 6 months, but I always like to go twice the distance, twice the time horizon for the expiration relative to the projected target date. And that is just a projection. I'd say 3 to 5 months, not out of the question if we close above 186.66. Until then, just the opposite. You're playing the short side, kind of near term, over the next 3 to 5 weeks, over the next month or two. As we push into the mid 180s, we can fall back into the mid 160s by the end of the year. So that's that. Downside today, breaking or opening below 182.54 does allow 180.29, where we can bottom out for the day, possibly in the next week, and from here rally back to 185.68. As I've been mentioning, that is kind of the 3 to 5 day swing trade right now, selling 185.68, buying 180.29. Regardless of whether you're closing a position or starting a position, you can buy 180.29 in anticipation of 185.68, and you can sell 185.68 in anticipation of 180.29. Now, if we do close today below 180.29, good high through next week, and I do think that reverses momentum. We do have a short-term channel bottom. You may actually call that 180.29 to 180.33. That if settled below, does pivot the market aggressively south into next week. So if you're a 3 to 5 day swing trader and you bought, Apple recently when we close above 180.29, if we close today below 180.29, then you should reverse, or at least get out of your long position, play the short side down to 173.10. This could be a 3 to 5 day sell-off. It could also take the better part of 2 weeks because this speed line is dropping and able to contain selling on a weekly basis. And once tested, we could round back up into December trade. There's no reason to necessarily anticipate the mid 160s again unless we were over the coming week or two to settle below 173.10. Then we set up for yet another test of meaningful long-term support in the 165.40 to 166.82 region, able to contain selling well into next year, and above which mid 180s anticipated as a 1 to 2 month target. We're almost there. The 230.62 channel top over the next year or sooner. And the last thing I will say, and I'm just sort of painting the broad brushstroke here, there's no point in even going there, but if over the next week, 2, 3, over the next month or two, we happen to close below 165.40, then this market does show actually a longer-term sell signal, 132.58, then anticipated over the following 3 to 5 months. That was almost a waste of air because there's no point in even going there. I'm going to leave you with this chart for the day. This kind of covers a 3 to 5 day swing trade. Keep in mind, we can grow overbought in the mid 180s here if we test it today. Overbought, that is to say, through the rest of the year. And inversely, if we close above 186.66, which I consider to be an eventuality, but not necessarily this week, then we enter a secondary buy signal that should yield 230.62 over the next 3 to 5 months. I say secondary because your first buy opportunity was just a few weeks ago in the mid 160s. I'm going to leave it at that. Please click like, share, subscribe. Check out those stock picks we put out this week in Nike and Starbucks and others that we've done over the last few weeks that are still relevant. I will be back Sunday afternoon with Monday's Apple, and you have a great weekend.